Hey guys, what is up? It's Artur here, and today we're learning how to read candlestick charts. So if you're into the forex market or trading stocks, or if you would just like to learn more about what those colorful blobs mean on a chart, by the end of this video you will learn an awful lot, and I hope you will have no questions left unanswered. If you would have, drop them in the comments and I will try my best to answer them. Let's get going. The first thing we have to get off the table is whenever you look at a chart like this, you might have extra indicators on top of what we call candlestick charts. So once you get rid of them, the picture is a bit more clearer. Another important thing is that you can set up your chart differently, meaning that you can tell how much of a time period each of those colorful lines, candlesticks, would represent. I personally invest in stocks based on fundamentals, so I'm completely fine with each candlestick representing one day on my chart, which is a usual setup. But if you're into trading, you might find yourself later on using different time intervals. But for the purpose of this video, we're just gonna keep it so that each candlestick represents one day. So let's talk about what we see on a chart like this. The first thing that strikes is that we have two colors. One is red, or sometimes black, which means a falling price within the time period you set your chart to be, and the opposite would be green or sometimes white, which would mean an increase in price. Okay, so why do candlesticks look the way they do? Each candlestick has two different parts. One is called the real body, which is the rectangular fat part of the candlestick, and the other one will be called shadows or sometimes a wick, which will be the thin lines extending from the top and the bottom of a candlestick. Let's talk about the real body first, because it's gonna tell you the difference between the opening and the closing price within your time interval. Once the time period ends, in our case, a trading day on the stock market, you will have a snapshot of your closing price, and if your closing price is higher than your opening price, your candlestick will be green, marking an increase in price. Or if you closed lower than where you opened, that's going to be a red candlestick, meaning a fall in price. Now, what about the thin lines called shadows above and below the real body, the rectangular part of your candlesticks? You know how the price of a stock or a currency moves up and down during the day or your set time interval? That's what the shadows are for. Whenever you're looking at a candlestick, you will be able to tell the maximum level and the minimum level the price has been during that time period just by looking at the shadows. For example, if your stock starts here and starts increasing during the day, you would have an enlarging rectangle, but if it starts coming back down, you would have a shadow sticking up on top, marking the very top price level where your stock has been during that time period. That's it for candlestick basics. If you found this video valuable, leave a like, consider subscribing, and definitely let me know in the comments down below what will be the first thing you will look up using your newly acquired knowledge. Follow me on Instagram and Twitter at Mr. Artur. And with that being said, that's it for today. I hope you learned something new today, and as always, thank you guys so much for watching, and until next time.